Yes, good afternoon, everyone. I welcome you to the first online forex trading. Sorry, I'm very late in starting up this online course. It's as a result of network somewhere far north, and you can understand how our country is in terms of network. Well, for today, we will only be talking about just the prelims, the just the words, knowing the write-ups, knowing some terms in forex trading. And can anybody hear me? Can anybody hear me? Okay, a reaction, please. If you can hear me, just give a thumbs up. Yeah. So forex trading is a wide financial market. It's the largest financial market in the world, with an estimated 7 trillion dollars transacted daily. So you can see, the estimated transaction amount can, if you add up just for 1 week, it can pay the whole debt of United States. So the market is very wide. There are various trading institutes or trading market or platforms. We have forex market, we have the crypto market, we have the indices market, we have the stock market, we have the futures market. All of them are all financial markets. But for this class and for the purpose of this lecture, we'll be talking only on the forex market, because the forex market is a skill. I'm sorry, trading the forex market is a skill, and if you have that skill, I tell you, it's one of the skills that it can either make you or mar you. You understand? And forex trading it's an investment. It's an investment platform, and it's not a get quick risking. No mindset of you want to get money quick in time. Nah. You end up giving to the market. Yes, you end up giving to the market. It will just be that you'll be a depositor and you'll not be a withdrawer. Yes, you can't say you started learning trading. You started learning the forex market, learning to trade the forex market in 3 months, and you're already seeing massive profit. No. It will take your time. The forex market is like a human being. Yes. So before you can know a human being, you have to study that person well, so that when they tell you, this person did like this, you'll be able to beat your chest, because you know this person very well. You can vouch for that person and say no. So that is how it is. The forex market have its character. The forex market have its behavior. The forex market have its own unique movement. So now, like I said earlier, sorry for the background, like I said earlier, forex market is where traders from around the world can trade the currencies of global countries. Can trade the currencies of global countries. Currencies like pounds, currencies like the euro, currencies like the Australian dollars, currencies like the Swiss franchise, like that. Many of them, but they are countries whose economy is big and greater. So, and they are countries whose economy has high volatility. Those are the those are the countries in which those are the countries in which we we trade their pairs basically. Yes. Sorry for the background noises. I'm somewhere, so I'm somewhere far north, so you know how it is. Okay. Um, let's ride on. So in trading the market, we have 4 trading sessions. There are more than that, but it's just 4. There are more than that, but it is characterized into 4. And why is it 4? It's because of these are the 4 countries whose economy is big and they are traded widely. Yes. And they are traded widely. So now, there are trading sessions. We have the London session, we have the New York session, we have the Sydney session, we have the Tokyo session. So now, for the trading sessions, me personally, I basically trade the London session, and the time frame for this trading hours is, for London session, GMT +1. That is for us here down here in Nigeria. It's from 8 a.m. to 4 p.m. That is the London session. For New York session, the United States, is from 1 p.m. to 10 p.m. That is for us down here. So for Sydney is in Australia. We have it as from 10 p.m. to 6 a.m. Yeah, I don't know if you are taking notes. So now for Tokyo is 12 a.m. to 8 a.m. You see, one thing about these trading sessions is that you have to study the movements of the market in each of these trading sessions to know how high volatile each pairs react. Like for the US now, the USD, any pair with USD, like for instance, a pair with USD can be GBP USD, that is pounds USD. You can have Euro USD, you can have Euro USD, you can have AUD USD. So any pair that has USD on it, you should know that the volatility of trading that market will be high when it's in New York's session. Yes, because USD is the currency for United States of America. So if you want to know the volatility of USD, you check from 1 p.m. to 10 p.m. And so that also goes to other trading sessions. Their currency is determined by the trading session they have at that instance. Yeah. So now, talking about the forex market, forex trading. I have so many messages inbox telling me, I want to learn forex, I want to learn forex trading. Yes. So now, forex trading is just all about buy and sell. The skill that deals with the buying of a currency and the selling of a currency. That's all about forex trading. And so, for you to be able to buy, for you to have that notion, for you to have that conviction, for you to be sure probably that a pair will go up and you will buy that pair, is that act is called forex trading. Yeah, so now it says forex trading is the buying of one currency while simultaneously selling another currency. Like for instance now, you heard the news, just like what happened on Wednesday when Trump was announced president in the US, United States of America. That information alone should give you an hint of how the forex, the pair, the USD pair was going to spike. It's either going to spike up or spike down. So now, for you to be able to know that this pair will go up or go down, it's called forex trading. So as I was explaining, it said trading one currency while simultaneously selling another currency. If you have that in-depth note that once they just release or once they announce the result of this presidential election in the US, USD dollars is going to rise. If you have that conviction that dollar is going to rise, if dollar should rise, then definitely other pairs with dollars will fall. Yes, other pairs with dollars will fall. If we go to, for instance now, let's go to on Wednesday, what happened when Trump was announced the president. Okay. This is it. This Wednesday when Trump was announced president. So you can see now these two pairs, this what is here now by my laptop screen is AUD USD. Now this is gold trading against dollars. This is gold trading against dollars. So when gold becomes sought for, when the demand of gold is high, dollars will drop. Yes, when demand of gold is high, dollars will drop. And when demand of gold is low, dollars will begin to rise. So now, the news concerning this election made dollars strong. So because it made dollars strong, gold had to fall. Yeah, I don't know if you understand. Because it made dollars strong, gold had to fall. So now that is why we have it here on the screen here. You can see the massive drop. Don't worry, we are still coming to candles. You will know about candles and the types of charts. But if you see here, this is a long down candle, signifying that dollar was strong because Trump was announced president. If you check other pairs concerning USD, you see that the same thing happened. Okay, now let's check. Let's check for GBP USD. We should be done with this class in the next few minutes, please. So now, let's check now, see. Now the same thing happened. See gold, see pounds. GBP is pounds. Yeah, pounds against US dollar. So what I'm trying to explain, I'm trying to explain to you the buying and selling. When you are buying a currency, you are simultaneously saying that currency you are buying will be stronger than the base, the currency you are selling. So now, this is pounds, GBP USD. This is GBP by my left, still there, symbol search, GBP USD. Now, this is on Wednesday. So when they released the result on Wednesday, now check, see the massive drop. It meant that gold was stronger than GBP US pounds when the result came out. So that is it. So now it's if you buy a currency pair expecting it to increase in value, you are going long. If you buy a currency pair expecting it to increase in value, you are going long. And if you buy and if you sell a currency pair expecting it to increase in value, you are shorting. What do I mean by that? Now see, let's go back to the XAU USD gold. The USD. Yes. So now, if I say I want to short, this is gold now. This is gold chart. If I say I want to short gold, it means that, okay, for instance, still using that election as an example, I have a note that I want to short gold on Wednesday because of US and presidential election announcement. If I say I want to short gold, that means dollars will increase. Yes, dollars will increase if I say I want to short gold. So now, me shorting gold means I am selling. I want to sell gold. Now, when you sell gold, all you just need to do is to place your orders. You place your orders that is going to come down. So now, how do you do that? We are still coming to how to use TradingView, but for now, this is a short brief I'm listing. So now you place your orders, you inspect, you take a view saying, okay, it's going to short to some pips, like 100 pips. Let's say that is 800. Let's say 100 pips down. Okay, 200 pips down. Then no, let's go down. Let's say 600 pips down. Then your stop loss is let's say 20 pips. 20 pips up. So 200 pips up. Yeah. So now, invariably, let's go down to 1 hour time frame. By shorting means gold is going to drop. Gold is going to drop. So now, when you place your order saying gold is going to drop, that means you are selling. You just sold gold. So for as many people who entered sell on that day, they got their money from the market. Clean and simple. And that's the same thing that goes for buying. For some persons, they said some persons might speculate that gold is going to buy. That is their longing. Gold is going to buy. So the result is already clear. The trade definitely went against them on that Wednesday. If you long on Wednesday, the trade your trade definitely will hit stop loss, because the result for the election made gold to fall and USD dollars to rise. Now, there are two types of market analysis. Talking of market analysis, there are two types of market analysis. So we have, what are they? We have the fundamental analysis and the technical analysis. Yes, fundamental analysis and the technical analysis. For the fundamental analysis, that is what I just explained to you a few minutes ago, talking about you knowing or getting a note, getting a news, getting a hint that this one will follow, this one will rise. So now trading with that news that you heard is called fundamental analysis. You are taking your analysis as a result of news or information about that country's economy. And in a month we have several news that comes up. from this from the hedge funders, from the central banks, Central Bank of England, Central Bank of China, like that. So all those guys are the big speculators of forex, the forex market. So now when you have a hint of what they want to do, like the CPI will be coming up in okay, we just did NFP now. NFP was first of November was NFP, non-farm payroll. So it's talking about what's going to happen in the US, the news on the US. So for people, me, I don't trade fundamental, but for you to know, fundamental analysis talks about the information you have concerning a country's economy, and that is what you trade from. I've seen guys from outside the country that they basically trade fundamental analysis. Once they do their research and they know market is going to, when they see some kind of perspectives from the employment, they see that employment in the US has reduced, or the production, because of the unemployment in the US, the deduction in unemployment in US, it will make the production to reduce also, and like that. So we just kind of news and information and analysis, it will now give you a clear insight on where the market is proposed to go to. And so now we have another one, the technical analysis. This one is very, very wide, and this is where 90% of profitable traders get their main setup and strategy from. It's from technical analysis. Yes, from technical analysis, and this has to do with candlesticks, chart patterns, double bottom, double top down analysis, all of them like that. I pray we'll get to that extent in subsequent classes. So now, talking about the candlestick, let's go now. Talking about the candlesticks, for some persons, this is a class for beginners. So I'm taking it as everyone watching and listening are just new to forex trading. Yeah. So now for the candle, in order, okay, this is how it's going to be. For the candle, we have the open, the close, the high, and the low. Those are what determines if a candle is bullish or is bearish. Yeah, if a candle is bullish or bearish, it determines on the candle's opening, the candle's closing, the high and the low. So now, for instance, this is a candle. This blue one here is a candle. And now let's just mark out the high and the low of this candle. Okay, this is the high and this is the low, and this is the low of this candle. Yes, this is for learning purpose, please. This is the high and this is the low for this candle. So now, looking up to, in this candle now, this down here is stated to be, this down here is the open. This down here is the open. Sorry, let me use a better, this here is open. confront. So here's the close. This candle close and candle open. This is the eye. This is the candle high, and this is the candle low. So now, having done this, explaining this this part, so that the candle opened here at this level, and it closed at this level. You see it, the candle opened below and closed up. So now that made it a bullish candle. The candle went up. So because it went up, it closed up, is called a bullish candle. I don't know if you understand. So now let's look for another candle that is bearish. Okay, we can still use the one close to it. Now this is the eye. Sorry, before we go to the next type of candle, this is the eye. This is the eye of it. The candle went up and still came down before it closed here. So if we go down to subsequent trading, subsequent time frames, you will see how high the thing went before it closed, came down and closed here. So the thing opened. It opened down here and it went down, looking as if it was going to be bearish, but price did this thing and pushed the market, did this thing and pushed price up further. It got to this point and it started coming down, then it closed here. So now let's check for this next candle. Now this next candle, see the eye. See the eye for this candle. You see the low. Just the same, it has the same low set. It has the same low. So now for the close, see how it is. This is the close here, and for the open, this is the open. So this is it. This is the low. Market open as it closed. This is the 1 hour time frame. It took just 1 hour to create. Every market has its candle. Every market has its candle. It took, this is a 1 hour time frame. It took 1 hour to create this candle. So it went up. It closed here at this point. So now this candle opened, and when it did open, it opened. This yesterday around 3 o'clock, 3 p.m. The market opened 3 p.m. So it started going up. It was going up. It continued going up. Then it started coming down again. That's how we got this high. It started coming down again, coming down, coming down. Then it crossed this open. So once it crossed the open, started coming down, and then it closed below the open. You see it. This one closed above the open. That's why it's bearish. It's bullish. So now this one closed below the open. Still kept coming down. Then it started coming up again before it closed here. Now this is the market close. So now, what can we bring out from this? When to know if a candle is bullish or bearish, you check if the close is above the open. If the close is above the open, then market was bullish. But if the close is below the open, market, that candle is bearish. So now you might say about some person's color. Color doesn't determine if it's a candle is bearish or bullish. Color doesn't. Like on a norms, if you open trading view on your phone or whatsoever, it will give you blue and red, or green and red, sorry. It will give you green and red. This is my preferred color. I chose this for myself. Yeah. So you can choose yours for yourself to be able to identify which one is bearish and which one is bullish. So that is that for candlestick. So there are different types of candlestick, and this came up from way back in Japan. Way back in Japan, we have various types of candles. There are various types of candles. Okay. Sorry, 1 minute. So now, candles are they are much. So the ones that are most common, that's what we'll talk about. So we have the engulfing bar. And this is how it looks like. I will draw it for you, then we'll look for it on the chart. Engulfing bar is like this. Engulfing bar is like this. Then we have this should be clip. Then we have something like this. Something like this. So let's have this to be black. Let's have this to be black. Now this is engulfing, the engulfing bar candlestick. The engulfing candlestick. So this is a candle engulfing, it engulfs it, like it takes out the whole candle. This is bearish engulfing bar. This bearish engulfing bar. So now where is it on the candle? Okay, this is it. This is one bearish engulfing. It is a price is about to go up. The market is about to go up. Then we have a bearish candle taking it out down. You understand? Taking it down. So let's look for another. Yes, this is another one. This is bearish engulfing. Bearish engulfing. Market is going up. Then we have a massive push down. Sell. Taking out the low from here down to this part. Yes, and there are two types of engulfing. We have the, just as we have the bearish, we have the bullish. Yeah, just as we have the bearish, we have the bullish. So the bullish is just simple. This one being here. This is just a sample. And we have here as blue, and we have here as black. Yeah, so we have here as blue and here as black. So this is it. Price is going down. Then when the next candle opens, we have a massive push up. Massive push up. Engulfing. It engulfs this candle. That's what it means. Yeah, so where is it on the chart? Yeah, this is one. Engulfing. Stick pattern. Engulfing bar. Let's look for another. This is another engulfing bar. Let's look for another. This is another engulfing bar. It engulfs the sell. Price was coming down. Then when this candle opened, it takes out the whole sell this thing and still push up further. It engulfs the price like that. So furthermore and further saying, we have the doji candlestick. The doji candlesticks. You see, one thing with Forex bar, the Forex market or the Forex chart, everything you see have a language. It has a language. So for you to be able to understand the language, you'll be able to trade it. So now, when you see a bar like this, a candlestick like this, this one, this is called doji. This is called doji. And what does it entail? It entails indecision of the market price. What do I mean by that? Price was pushed up, pushed down, and still pushed up again. And once you see this, it tells you of indecisive decision that took place in the market. So now we have the, after that, we have the dragonfly doji, another type, dragonfly doji. Yes, this is the dragonfly doji. The difference between this one is by the center, this is by the center, but this one is by the top. Yeah. So now we have the hammer. Hammer is a long wick with a small body. A long wick with a small body. So where do we have that? Where do we have that? These are just types of candles, and the types of candles will tell you, this is one here. You see the difference between hammer and dragonfly doji is, this one is upper, this is dragonfly doji, not a hammer. So this is a hammer. It's as looking like a hammer. You understand? So this is bearish kind. And let's look for the bullish type of hammer. The bullish. This is another dragonfly bullish. The bullish. This is one. This is hammer. This is a bullish hammer candlestick. Yes. I think we'll have to stop here for the class. Will continue next week Saturday by 2 p.m. I was a bit late today because of the network. Network was not in my favor at all. It was not in my favor, but I believe it will be better. It will be better by next week. So on next week we'll be dealing with next week we'll be dealing with the technicals of trading. We'll talk about technical analysis. Talk about the technical analysis. We have using the indicators, using the top-down analysis, using the double top, double bottom, using the triangle pattern, like that. We'll talk about it. So for now, it's a goodbye, and see you on the subsequent lectures. Before I forgot, yes, talking about the challenge that is ongoing, the $18 to 1,000. Yes, still on. I will have to be dropping videos on the progress every weekend, because of the nature of work I may not be doing it daily, so it will be weekends. So I'll soon drop the one. We are still on a drawdown. And hopefully we'll go into, market will always do its thing. That trade is the challenge is just supposed to go for just 6 successful trades, and I'm there already, but market will definitely do its thing. And this is just all about, since I started this